Hello, okay, okay, am I on the camera now? Yes. Hello, everybody, and welcome to yet another episode of Top in Tech. And my name is Karamjit, and I'm going to just open up with some introduction remarks, and I'm going to be the moderator for this session also. But first of all, for all of you who have already registered and sent in your questions beforehand, thank you so much. We absolutely love to get those questions beforehand. And the panelists will be answering some of those questions, and they will also be answering questions that you send in live during this 56 minutes of the show also, okay? So we encourage you to send in questions to challenge us, the panelists, because this is a session where all of us want to learn together. And if you ask a great question, all of us are going to learn from having answered your question. Now, this session is quite interesting, right? It's talking about being a global investor. And for those of you who follow probably the most active and the most influential market in the world, US, you know that is going through a swoon at the moment. And for those of you who are looking to enter the market now, so obviously you'll be tempted to go in now. This show is not about giving you advice on whether to enter the market or not. It's about just being a global investor, and you're going to hear different parts of what's going on and what our three experts think. And of course, we had to have somebody from the crypto world, right? And give you some opinions and answer some of your questions also. We're going to get right started now with the show. And the first panelist we're going to bring on is Ken, who's with Stashaway. And everyone gets about 3 minutes. When I say everyone, all three of them get 3 minutes to share their opening thoughts about what they think about this topic. And then I'm going to start by asking all of them the same question, which is just smack center about our topic, which is what does it mean by being a global investor from their perspective? And then we've got the individual questions for all of them, all right? So it's going to be fun. Ken, the mic, no, the stage is yours, or the screen is yours. There you go. I still get it wrong. The screen is yours.
Good evening, Karam. Good to be with you.
Sure.
Big thanks to the Digital News Asia team for bringing this all together. I look
and
forward
Malaysia
to
Kini.
and thank you, Malaysia Kini, as well. And I look forward to have a great panel with Dr. Fazli and Mrs. Syme. Yep. Today's topic obviously is really important, right? We're going through a lot of volatility right now. But just take a step back, my name is Ken. I'm the country manager of Stashaway. Stashaway is a digital wealth management platform, or robo-advisor. Some people call us that. We're the largest robo-advisor in Singapore and also Malaysia. Essentially, what we do is we help people grow their money for the long term with the convenience and low cost of just using an app on your phone. And if you deposit money with us, you can expect to invest in global multi-asset class portfolios, which also have an ESG function, which we have also launched recently, and also thematic portfolios, which we've launched late last year as well. So exciting space. I look forward to today's discussion, and thanks again for having me on.
So I guess, Ken, just a quick one. When you say thematic portfolio, means like, are you talking about like minerals, you're talking about commodities and maybe more specific, right? Certain type of commodity. Is that what you mean by thematic?
We've launched 4 thematic portfolios. One is around consumer tech. Another one is about tech enablers. There's one on healthcare innovation, obviously very topical these past 2 years. And then the latest one is clean energy. So all these thematic portfolios are really about societal changing technologies that ultimately you want to put a bet on. More risky, but again, if you think about, I should have invested in Tesla X amount of years ago. Should have invested in Facebook or Amazon X amount. This is your chance to do it on a portfolio basis. So that's what we've done.
Okay, cool. Thank you very much. Okay.
Thank you.
Now let us have Dato' Fazli on. And I've known Dato' Fazli for a long time, so I may slip into calling him Faz, and he's okay with it. So just for all of you who are listening there. Okay, Faz, 3 minutes now. Tell us, what you're gonna, what are your key thoughts?
Yeah, thanks a lot, Karam.
No problem.
Thank you, Karam, and thanks to Malaysia Kini and Kini Events Scale Up DNA for having us today. I'm Fazli. I am the CEO of MX Global, and we are the latest recognized market operator for the digital asset exchange. And essentially what that means is digital assets are what people may more commonly refer to as cryptocurrencies. So we are regulated under the Securities Commission to be able to afford you a trustworthy and safe way to be able to buy your next cryptocurrency. So be that Bitcoin or Ethereum, what we support now. And with MX Global, we believe that buying digital assets should be safe, easy, and very much real for the investors, because a lot of people emphasize the currency side of cryptocurrencies, but really the magic is in the crypto part. So there's a lot more that we can do with these assets. So we're working very hard to be able to realize some additional utility that you can do, not just in investing in them and hopefully enjoying the upside or what we see now, some tremendous volatility in the market, but also what more can you do with that and staying within that compliant, regulated space but essentially making your life much more useful by having this exposure to what is a global new asset class.
Yeah. A global new temperamental asset class. Yeah. Okay, good. Thanks a lot, Fats. Now let's bring on Mrs. San, who's the MD of Rakuten Trade Malaysia. Oh, by the way, okay, quickly, we have a very interesting quick poll by Fats first. Okay, all of you.
That's right.
Please answer that.
So we gather that crypto is a new domain. So it'd be quite interesting to see from our audience today, who's investing in crypto. Is it your first time, or is this the first time you're hearing about it? So it'll be really great to kind of shape maybe some of our conversations later with some of the results. So please do answer the polls. Thank you.
Instead of putting what's crypto, you should have put it's a scam and see how many people pick that.
It's a trap.
Okay, that's fine. Cool. All right. Thank you very much. So all of you are there. The poll there is up there, right? You can just quickly answer and the poll will disappear once you've entered your answer. Now let us bring on Mrs. San from Rakuten Trade Malaysia. Mrs., the next 3 minutes is yours.
Okay, good evening, and thanks for inviting me, Malaysia Karami, and Karam. And yes, I'm the CEO of the Rakuten Trade, and as you know that we are the purely online digital broker, stockbroking business. The customer can trade the Bursa Malaysia shares, and then also we just launched as you watch the video, so just launch the US trading, so the customer can trade now the Malaysian shares and the US shares. So and the customer demand to the global access keep increasing. That's why we launched the US trading. Yeah.
Okay, good. Short and sweet. All right, very good. So now what we're going to do is we're going to switch back to Ken first. And this is the only time I'm going to ask the question that all three panelists will be answering. And if we can have everyone back on the screen, and then Ken will answer this question first. So look, the topic is about being a global investor, right? And we've got just about around 80 participants right now. Mm-hmm. And so in your opinion, just your professional and your personal experience, right? Meaning, family, friends, right? What do you think being a global investor means, right, in our Malaysian context?
Yeah, I think it's no surprise that wherever you live, whether you live it, I spent 8 years in Australia in uni, and now obviously work in Malaysia. There's this inherent home bias in whatever we invest, right? And also systemically, we have EPF and to a certain extent ASB, which also very much focus on our local capital markets, right?
Yep.
EPF invests 30% overseas, so 70% local in stocks and bonds. ASB mostly at home, but with a view to expand more abroad as well to chase returns. So I think that the context to set the scene firstly is that there's a lot of inbuilt home bias with Malaysian investors, and it's not a Malaysian problem; it's a global problem. So being a global investor, being a global investor, I think is also it's never been easier as well, because before maybe 5 years ago you're able to access interactive brokers or things like that you can access from Malaysia. But now with all these product providers, I think it's so easy to trade any asset class from the comfort of your own home. All you have to worry about is the forex risk, putting your hard-earned ringgit. But if you look at any major currency around the world, we have weakened against any major currency, bar the British pound. They have had their own problems. So we've strengthened against we have weakened against the US, Singapore dollar, let me say, Euro, yen, right? So I think investing globally is paramount to getting returns. And if you look at investing in Malaysia, it kind of forces you to be a stock picker, which is why Mrs. San's platform is very useful is because if you just stuck with the index, you would have done flat or maybe slightly negative over the last 5 years.
Wow,
right?
5 years.
But if you, actually, even if you extend it to 8 years or so, it's still the same. If you look at the US market and just blindly invested the S&P, you would have gotten anywhere between 16 to 18% over the last 10 years, actually. Imagine 10 years of 16 to 18%. If just investing in an index fund, that's fantastic.
And
So
crazy.
there's so many new markets opening up. US obviously is one of them. Hong Kong, China is another, and cryptocurrency now being kind of like decentralized, but counted as a global internet currency.
Yeah.
Very, very exciting. And I think just to end, I think in the end of the day, it's really about asset allocation. How do you form your portfolio? How do you build your portfolio? There's so many tools that all three of our platforms can provide. And I think the world is your investment oyster.
Yeah, man. The world is flat, man. Flat. Okay. All right. Or the world is click. You just say the world is at the click now. All right. Okay. Thank you very much. Fats, you want to take the same question and then we'll go to Mrs. Sun?
Sure, Karam. Thanks. So really, what does it mean to be a global investor? I think the internet and you know, applications and the way that we live a digital life nowadays has kind of changed the access to what you can get, as Ken said, from the comfort of your own home or even onshore in Malaysia, right? Through the internet, you can access now markets on the other side of the world. You can access brand new products, which typically would have taken a much longer time to get to your market. And so I think in today's world, the internet is really what has enabled a lot of us to become global investors, and having access to the products that would have otherwise been inaccessible in the past is, I think, the differentiator now. Having said that, I see the 16 to 18% index gains, but of course, we're in a fairly niche and highly speculative space. So when you look at, you know, maybe the what you might call the front runner or the biggest of the blue chip cryptos, which is Bitcoin, right? Which I think for many people, sometimes they even confuse this term cryptocurrency with Bitcoin itself, which is just one of the cryptocurrencies. I'm looking at a chart right now that you know, in 2013, the year-on-year growth was 5,507%, right? So again, I'm in no way advocating that this is where you should put all your money, but there's huge volatility, huge speculation in the space, and overall we can see that it has kind of outperformed every other asset class in the world. Now, bringing that into the fore, whether it's safe in the sense of risk mitigation for the average consumer, I think there's more to that question, right? Because as Ken kind of alluded, there's a lot of local bias when you invest. There's a lot of also local perception, right, and expectations. So I think in Malaysia, we have to be cognizant of the fact that there are many historically get-rich-quick schemes. So we really always advise all investors, portfolio diversification may be a strategy you want to do, but definitely doing your own research, be it whether in cryptocurrencies or any of these other securities that you're investing in, that's paramount. You should know what you're buying and you should know the risk that you're taking. I think a lot of people very easily throw around the phrase, or don't invest what you can't stand to lose. But the reality is many people bet the house on what they think is going to be a quick flip. And I think people have to be cautious when it comes to that. As much as the access comes, I don't want to quote Spider-Man, but you know, with great power comes great responsibility. So you have a responsibility on yourself to ensure that you know what you're investing in and you know what the potential upside and also downside can be. Thanks, Karam.
Yeah, very interesting. Okay. The same question, Mrs. Sun, how do you think of Malaysia's adoption of being, among Malaysians, right, being global investors?
Yeah, I can see the lot of the investors, and then nowadays, as Ken mentioned, they can access the global financial product. Yes, such a way provide the digital global advisor function. Yeah. They access to the US ETF and the European ETF. Now, the cryptocurrency is also the worldwide kind of the global financial asset the Malaysian investor can access. So nowadays, we provide we are the stockbroking, self-oriented. So the other portfolio, to diversify the portfolio, that we provide the US. So the customer must be happy to diversify the portfolio by themselves. Only the Malaysia, once the Malaysia stock going down, how they diversify the asset. The same thing happens once the US market go down, how they diversify the asset. how to maybe the risk mitigation the method that we provide the US.
Okay. So you've got those two markets now, and there's more than enough stock options there also. All right, for people to look at. So, and actually, it's a good time that you've introduced ability to invest in US stocks, because obviously you can even buy a single share. So, right. So, I mean, most people end up buying 10 shares, right? And just to say that, I've got Facebook shares. Right? Yeah, one share. Well, you can do that. Literally open up the whole world now. Interesting. And I'm sure you may get a question saying, hey, Mr. San, if you've done US now, when you're going to enable Japanese shares, right? Expect that question, maybe. So yes. I'm not asking you that. Maybe somebody will laugh. But anyway, let's now just move on to Ken. We're going to go into individual questions. And for all of you out there also, remember, you can put in your questions. I already see some questions coming. The panelists will look and see whether they want to answer any of the questions or if they're targeted at them, right? Ken, and this was a question asked earlier by Jack, right? And it's about, how do we build our portfolio this year, right, in 2020, to become global in a secure way? Kind of interesting question. So Ken, you want to take that?
Yeah, absolutely. So how do you build your portfolio in a secure way in 2022, right? So I think the big risk for this year is inflation. So if you were to look at the short term, meaning 1 year time horizon, I think whatever you use as building blocks of your portfolio really should take inflation into account. So inflation is not just a US thing, it's now a global thing as well. Yeah. And if you were to look at things that hedge inflation or do better than whatever inflation is, right, around 5% CPI in the US, for example, that's going to keep you ahead of inflation. So traditional asset classes like gold tend to look at hedging inflation, but then there are also things like energy assets like oil and gas or commodity producing countries like Australia, Aussie equities with weightages towards, say, BHP Billiton and Rio Tinto. Commodity prices have been doing very well. Those actually give you very good inflation protection as well. So if you think about which businesses tend to do well in an inflationary environment, it's people who export the inflation away from themselves, rather than, say, if you're an airline, you receive that inflation and it hits your income statement, right? So if you think logically and build your portfolio to minimize the risks around that exist in the world, that's probably a good way of doing that. So I will also say that on the protective side, don't forget about bonds and things like inflation-linked bonds. There are ETFs that tend to match what inflation does and give you that as a coupon. So if you're looking at trying to maintain a safe stance overall and still be a global investor, look at both the equities as well as the fixed income side of things. And there's no easy way. There's no easier way to do it than actually just picking a bunch of ETFs and putting them together in a portfolio for the core part of your portfolio. If you want to take more risks on other things, you can of course invest in some cryptocurrencies and also some stocks to give you that outsized return. But for the core part of your portfolio, why not just club together a few ETFs and that's about it. You don't have to overthink it really.
I guess you're mentioning that because on your platform, people can invest in ETFs also, right?
Yeah, so we have 12 portfolios of different risk levels, which are made out of, say, 7 to 9 ETFs each. We allow you to look inside these portfolios and decide for yourself how much exposure you want. Recently, we also launched a feature where there are equivalent risk portfolios which have high ESG ratings as well. So if you want to align your profits to the planet, right, that's one very easy way to go about it as well. So I'm just saying that we've done it for you, but you can do it yourself as well.
Correct. But just a quick one, Mr. San, do you, on your platform also, do you have people can choose ETFs also to invest in, or it's only strictly just individual stocks?
The ETF also can possible.
Okay. Right.
Malaysia and US.
And US, okay, good. So you've got lots of options there, everyone. Okay, cool. So let me just go on to a question to Fats, right? So, and this is about how do Malaysian digital asset exchanges, right, compare to international exchanges? So people asking about how you compare with Coinbase and Binance even. So you want to take that?
Yeah, that's a great question. And I think it would be a great time to kind of pull up the poll results if you can. If you could share the results of the poll, I can kind of skew. Okay, so a bit different than our general result for this kind of question, but I think it's very much because our audience are also a bit more tech savvy, right? But somewhat consistent in the fact that for a lot of people, crypto is not an immediate thing that they're looking at investing in, especially in the Malaysian public. Right? A lot of them are still not really in tune with or have heard enough about what it is. And we also take note that a lot of investors in the retail space are coming into this because they've heard from a friend or a girlfriend or an uncle or an auntie about this thing. And then this fear of missing out it's very real in the crypto space because they see very outsized returns or they hear of claims of outsized returns. Yeah. Now, I think we should make a mention here that in the Malaysian regulation, it's not just service providers like us that provide you a platform to buy, which is regulated. It's also the cryptocurrencies which are available to the investing public. So in Malaysia today, even though globally maybe there are thousands of cryptocurrencies that you could choose from, and maybe that's one of the reasons that some very enthusiastic Malaysian investors are looking for that kind of access. In Malaysia today, there's been 5 which have been effectively whitelisted by the Securities Commission. So that's Bitcoin, Ethereum, Litecoin, Ripple, and Bitcoin Cash, right? So really, there's a very rigorous process that we go through and the regulator goes through to assess whether cryptocurrency is viable to be introduced to the investing public. We also have to bear in mind that it's been largely also been a retail play. So that means the regulators also very well aware that who's going to be buying into this is your man on the street and not really a professional fund manager and such with an entire analyst team, right? So I think if you look at the dominance of Bitcoin and Ethereum and these other 3 coins within the composite of what is the cryptocurrency sphere now globally, they are what you will call blue chip. You know, they are safe in the sense that there's a lot of liquidity in the market. There's global demand. There is enough is known of their utility and how they're used that you can make an informed decision. What we see a lot of people are chasing are these very speculative meme coins, or I can't say the full word, but you know, it's spelled SHIT coins, right? Where they hear about it going from 0 to a few thousand. But that's really where we would really caution a lot of the investors from looking away from those, avoiding the short-term lure of those kind of investments, because I'm sure many of you who have tuned into Netflix in the last year have watched Squid Game. And there was an infamous token called Squid Game token, which a lot of the investing public confused to be fully endorsed by the show itself. And it was just, you know, they kind of copied the name. And that's one of the downsides or where people can really, take advantage of this decentralized nature, because there's no regulator in place. There's no one's going and saying, are you really representing the Squid Game when you put out Squid Game token? And that's something that if you do a quick Google, you can see a meteoric rise. And at the same time, within a day, it falls to almost 0. And that's what they call in the industry a rug pull. So a lot of people lose money very fast on this very speculative, very much likened to penny stocks in the stock market. So I don't think we'll be seeing any of those in the Malaysian regulated space anytime soon. But at the same time, we do know that a lot of investors want more variety in this market. So we're always very open, and not just us, but also the other 3 other operators of DEXs in Malaysia, very open to hearing from the market what they demand. And then just bear in mind that there is a process that goes through to make sure that is in a way viable for the Malaysian market.
Okay, interesting. I think when you also mentioned, I was talking to a former hedge fund professional. He was Ivy League education, and then came back to and then was working in the UK for hedge fund, then came back to Malaysia, worked in the hedge fund sector, and he has launched an app to play in this space. But he said that he actually did a rough straw poll among friends, right, and family members, and he found that all of those, like in the ones like 25, 26 and below, he said they don't want to, if you talk about, would you invest in mutual fund or unit trust, they look at you and give you like a dirty look, right? That is their father's generation. Unit trust is grandfather used to invest in unit trust. They are keen to invest in cryptocurrency and even in hedge fund also, right? Assets. And it's amazing. He said this centennial generation, and I know in a previous conversation with Mrs. San, he said that there is a blue ocean in Malaysia, this emerging pool of young executive professionals who are entering the space to try to invest now, and he sees that an exciting opportunity. But this young group of people don't want to invest in the asset classes that their parents, right, their uncle, aunties invested in. So I think you're probably going to see a big spike in this space once they especially when they start working, right, and they've got a bit of disposable income and they start spending. And by the way, today I just met somebody who I've known for a time. He said that every month and he's like 29 years old now, but he's one of those early adopters, right? In playing with things and all. He said every month 20% of his salary he allocates and he invests in crypto assets. Every month 20%. So, and he said he's not worried about the prices coming down because he's in it like for the next 4 or 5 years or 6 years, right? And I said, wow, what an interesting mindset these people have, right? So kind of interesting. So that's very hard to do.
So actually, Karam, if I can add to that, right? I actually think that language is a very symptomatic kind of a point that you can look at. It's very interesting if you look at anthropology and how things traverse across nations, right? It's really the first time in human history that similar social norms have kind of like progressed throughout the entire world. You look at the language, right? This entire generation speak more like each other from across the world than maybe our generation or our parents' generation. Yeah. So, and then when you hear the terms that they use, like terms like YOLO, FOMO, you only live once, or fear of missing out.
Yeah,
it's a very real thing, and it starts shaping their perception. And that's why I touched on a bit on the polls. It's not the majority of polls that we do. We find that the investing public that are in cryptocurrencies are really young. Number one, they are investing for the first time, and they don't think of investing in the same way that maybe the older or I think those who are in their late 30s, early 40s are thinking about it. They're not looking at it as a way to grow wealth. It's more of a crapshoot, right? You bet on what you're a fan of, and you follow people who you are fans of, and those people really directly influence your decision. And it's not a Wall Street Journal, and it's not an analyst report. It's what Elon Musk tweets. It's what the Uber influencers put out on the Instagram, and that really shapes what you think is a good investment. Exactly, yeah.
Okay, wow, interesting. So just amazing, different world. Okay, good, thanks. So let's just quickly move on to a question. I'm going to ask Mrs. San, right? And Ken, when I come back to you, if you've got a question from the audience, I see there are already some questions there if you want to pick up on, right, to answer. But Mrs. San, I think there was the fact about education, right? So improving financial literacy is important towards improving ability to be a global investor. What do you think industry players should do, which obviously then includes Stashaway and also, MX Global? And of course, your fellow, brokerage peers also.
So anyway, the financial literacy is very important, and then the investor access to the global. So in that case, as a stockbroker point of view, customer have to pick up the stock, right? So in that case, we are not only the broker. We provide the education. Okay. What kind of the stock they can buy for. Actually, the client base, and 80% of them is less than 3 years experience. Most 80%. Of them is beginners. That's why we provide the webinars. Keep providing the webinars. So sometimes how to diversify the portfolio. Sometimes a pick. There's a combination. So the stock trading, yes, and a very risk appetite customer, yes, buy, sell, buy, sell, buy, sell. Maybe simultaneously they try to trade the cryptocurrency.
Right,
but most of them, like enjoy the volatility. But most of them is maybe the saving the money in the future. So the saving the money in the future, asset building purposes. So we try to provide educational contents.
Okay, but do this younger group, like when I say younger group, I probably mean like 28 or below. Are they even interested in the education, your educational webinars you have? when to cut your losses or when to sell, right? It sounds like a boring topic that their grandfather or their parents should listen to, not them, right? Because they're full of optimism. The world is the oyster. Do you find your webinars is the younger set who attend, or if you assuming you have that kind of data, or it's the older generation who are attending? Older means 30 and above, lah.
Yeah. Older generation maybe that looks like they are kind of their on-site seminar, something like that. But our idea, yes, for the young generation. So we use a Facebook, maybe the fireside session. Okay. Talking with the the other panelists and receive the question and answer the question to the audience. So it's a little bit different.
So you're trying to make your webinars a bit more hip, so the younger set will want to be interested to listen in, right? Okay.
Correct.
Okay, fine, cool. All right, thanks. So let's now go back. Ken, is there anything that you found from any of the questions that you want to take on?
Yeah, so this is a bit of a kind of composite of some of the few questions that have been coming through. So I think what I want to explain a little bit on is how we manage these portfolios, because I talked a little bit about the portfolios and how they're made out of different ETFs.
Yep.
But we actually also manage it through different economic cycles. So if you imagine your life time of investing, probably around maybe 30, 40 years, you'll probably go through one whole economic cycle every 10 years, right? And there'll be a boom cycle, a bust cycle. And if you imagine the old school way of having to do everything yourself and change things yourself, okay, now it's a recession and you switch more to bonds. Oh, now it's good times again, so we go back into cyclicals. Now it's inflationary environment, then we switch things up yet again. So actually we use our investment framework to look at this economic data and then determine where we are in the economy, and then give you the best portfolio to either do well or to weather that part of the economic cycle. So in the last 4 years, we've gone through a recession during coronavirus, very, very quick recovery based on quantitative easing. Then we went back into good times where productivity was there during the reopening. And then now, because of the very low base of last year, there's a lot of inflation going on, right? Because of supply chain problems as well. So we have switched into 3 economic kind of phases in the last 3 years.
Very rapidly,
Very rapidly, because of abnormal situations, obviously. So what we do is actually we change the constituents of the portfolio for you to give you the best performing ETFs for that point in time. So when I said just now about inflation and all that, we can do that change for you. And you don't actually have to do anything but understand what's going on. So I think that kind of answers a few questions that we have there. That's what we are as a robo-advisor. What we are not is some sentient AI that will never lose you money and everything will be fine. And because we're a robot, we can see into the future and all of that stuff, right? So I think there's a limit of what technology can do. What we have done is basically have a system to make investment decisions. And we base it on fundamentals, right? The actual economy itself. So I think in a nutshell, that's essentially what it is. And I think that investors should have a few platforms that they rely on to actually express their view, right? So if you have your EPF and ASB already, that's fine for the local side of things. If you want to have a global investment that's super diversified, you can use Stashaway if you like. But then if you're a stock picker, if you're a cryptocurrency investor as well, there's different platforms you can access. So it's really about looking at your overall investment portfolio and say, okay, this one, let's say 30, 40%, the risky stuff, maybe 10, 20%, right? And that would win you out of the battle right there.
Okay, interesting. Okay, I'll move on to Faz first, then Mrs. San. And Mrs. San, when I come back to you, if there's a question you want to answer, from the audience, you can. Otherwise, I've already prepared a question, right, for you also. Faz, there was a question on, and which is quite interesting, right? I found, what is the impact of China's blockchain policies, right, on cryptocurrencies? Okay.
Yeah, so that's it's a very interesting multi-layered question, Karam, right? I think, of course, speaking from the perspective of being in Malaysia, from the Malaysian economy, number one, China is our biggest trading partner and has been for the last 12, 13 years, right? There's a huge amount of trade that goes in and out. And Malaysia is one of the highest adoption rates of cryptocurrencies in the world, right? We're at about 18% of the sample of the size that was sampled in a recent study. And we're, I think, just head to head with Nigeria in terms of like the highest adoption of cryptocurrencies. That doesn't mean that the number is entirely accurate, because there's a lot of double counting because of the nature of cryptocurrencies. If you have an Ethereum wallet and a Bitcoin wallet, I wouldn't know both of them were yours. But having said that, China has taken a very different approach than any other major country or superpower in the world. They have outright banned cryptocurrencies onshore in China. And as we have seen in the news recently, they've actually been quietly working on their own blockchain policies, or national blockchain policies. They've developed their own national blockchain standard. And most recently, and I believe it was a week or two ago, you can buy NFTs in China, right? Much like the NFT craze going around the world right now, you can buy NFTs on Ethereum, on Solana, on Polygon. But in China, you can only buy it with digital yuan. And I think that's very interesting, because will China be introducing a new way of engaging with crypto-based trade or blockchain-based trade with a digital equivalent of the currency? So, a lot of people refer to them as CBDCs. So yes, the digital one is kind of like a CBDC, but it's not entirely a CBDC, because it's actually a digital representation of their existing currency. So I think, especially for countries that are trading very regularly and dependent on trade with China, if we're going to be adopting certain blockchain standards that then affect our supply, demand, and how things are paid, right? Because in every trade, three things move. So it's goods, it's payments, and it's data, right? So it's not going to be something that's going to affect us next week, but it's going to come very slowly. But at some point, it's going to happen very fast, because a lot of our trade infrastructure may transition to mirror what China has proven out, because not everybody has 1 billion people to kind of pilot a certain approach and then be influential enough to have other countries follow it. So I think this is a very interesting space. There is no given future for cryptocurrencies, even though what we see is happening in the West and other countries, and we try to emulate it here. There's a very real chance that that this whole crypto fiat bridge may be solved by the way that countries like China approach it. So I think it's something that investors should look out to, because I don't think fiat is necessarily dead. And definitely in the regulated spaces, there is a high motivation to protect the fiat interest, right?
Yeah. But, like with China introducing, right, its own, blockchain protocols and standards, right? And if it starts using it in trade, because they are, I always thought Singapore was still our biggest trade partner because of all the goods, right, that come, by ships, and then they're repackaged, right, and sent across the border and all that. So China is interesting, and they obviously then have a lot of heft, right? If they decide to impose certain rules, we have to play by their, because the US is only our third partner. And then, Mr. San, you got to make sure Japanese companies do more trade with Malaysia so they can move up to third. I think Japan is fourth only now, or fifth among Malaysia's trading partners. But okay, yeah, very interesting scape here. So good, interesting. That was a good question. That was kind of cool. So okay, now let's move back to Mr. San. And is there any question from the audience you want to answer? I asked you a question that I have for you, Mr. San.
You can ask some question, but okay. I received a question. Lockdown is the same as Bomi, but yes, broking so point of view is the same.
Okay, fine. So look, what are your thoughts on obviously because you've introduced US trading right now? What are your thoughts for US market outlook right for this year? So I think the person who asked this also wants to try to get some stock tips from you, so better not give any stock names, okay? Just talk about the overall market outlook. What do you think? When you of course Rakuten trade, and of course I know that there's a pool of experts, right, doing market analysis for you, right, and you can tap that expertise. So yeah, share with us.
Yes. I talked to the research head today. So according to yes, everybody worry about the Federal Reserve, the interest rate, the hike, in the future. In that case, everybody worry about the market. So now the Wall Street is sell pressure, a lot of sell pressure, especially the technology stock. Also the facing the some and the sell pressure. So also the big VIX index, volatility index.
Volatility, yeah.
Here right now is pretty high. It's 31 point, 32 point right now. Yeah. So that's why the everybody's the psychological is very, very volatility, very scare the market. US and it was a US market affect to the other market, right? So the Malaysian market also going down. So maybe, but it's a good chance for the short-term trader to enjoy this volatilities.
So interesting. You mentioned, you spoke to your head of research, right? So you have NX. So, and there was a question actually I wanted to ask Ken, because when I look at the two of you, so Mr. Sun is older, and I look at it and I say, okay, more experience, right? So more market knowledge, and you look at Ken and I'm thinking, younger. Do I want to trust the young team? Yes, behind him also. So it's kind of interesting that is also language, right? So I know Fats talks about language, right? And ethnography. And then here I'm looking at the two of you all, and I was quite struck by why I was thinking like that. Maybe because being older also, I would lean towards say, I think maybe Rakuten Trade can give me better advice. So Ken, what would you say about that?
I think everyone has their inherent bias, right? But
true.
We have to look past that and kind of stress test it a little bit. I don't mind if you try and probe a little deeper to see if my inexperience kind of like it's true, or if I'm wise beyond my years. But I head up the Malaysia business and I grow the business of StashAway in Malaysia. But I actually do rely on StashAway's founders, my CEO and CIO and CTO, which are Singapore-based, to lead the company, to build the company, and to also manage the fund as well. I do sit on the investment committee, but essentially this, what I described earlier and how the funds are managed is the brainchild of our CIO. Also another, he's in his early 40s, he's from Malaysia, but, again, it doesn't really matter where people are from. It's just, again, that home bias. I use it when it makes sense. In Malaysia, I like to say our CIO is Malaysian, right? But I would say, if kind of pivoting a little bit from young versus old to kind of maybe to our biases in terms of what we look at and have comfort in as well. Our parents might like, my parents at least, like property and unit trusts. I like, equities, crypto, and ETFs. And maybe my son, who's 6 months old right now, would like NFTs, right? So I don't know, right? It'll always change. So I would say that don't be dismissive of any kind of asset class. Just understand how it works for you, understand the profile of whether it's safe, it's super risky, or it's risky, and use it in the way that kind of fits you the best. And what I will say about traditional asset classes is, with traditional asset classes come traditional gains and losses. With new asset classes, you have extraordinary gains and losses, right? And I think one thing people have to understand about crypto as well, don't get me wrong, I'm also as laser eyes as Dato over here, is that sometimes you need to contextualize the percentages. So if he said just now that there was 5,000% gain, if you look at the calendar year, they happen in very specific years during over a very short period of time. So if you're not invested through the whole thing, and if you're not hodling, you miss out entirely. And let's say there was a bad year, say in 2018, you say, okay, go up, let's say 300%, let's just say, and then in 2018 it goes down by half, and so it's like down 50%. So it's like go up 300%, down 50%. So it doesn't sound so bad, but like your worth of your asset has gone down by half. So you got to be careful with these things. And I do think that if you see these things, you have to contextualize it, analyze gains, look at what's your risk-free rate, and you have your overall portfolio. Let's say Bitcoin was 5% of it, and it did quite well over the last few years. Then you go, okay, then this is how well it's done. And maybe should I take profit? Should I invest more? There's some very common sense questions that you can ask yourself to be a better investor overall.
Interesting, Ken, you keep saying yourself. So yeah, I think it sounds like there is still, even despite all the AI tools out there is still a lot of responsibility on the individual, right? For them to know himself, herself, right? That this is where I am standing and all that. So, and people cannot run away from that, say that, oh, great, robo, right? AI, or I want to use Rakuten is Japanese, PhD people, developing the AI. Okay, I trust Rakuten and leave it to the super smart algorithm. So it's not that you must know yourself also where you are. But I'm going to just jump on quickly to a question because Barry Uy gave a question for all three, but I'm only going to ask to Fats, who's the youngest of the three, and then to Mrs. San, which is, right, what is your advice to young people, right, who trade based on hype and FOMO? Is it supposed to be FOMO or FUMO? Interesting, huh? So Fats, you will know. And then, because they think that trading in traditional instruments can increase their wealth, or would you convince them to trade in crypto because it's the in thing? So you want to take that, and then I'll ask Mrs. San to answer the same question.
Yeah, so it's FOMO, fear of missing out.
Yeah, okay. I thought it's a new acronym. I missed out on FOMO. That's why.
Yeah. And I think, like as previous speaker mentioned, Karam, it's important to understand the context, right? This is a generation that have lived on maybe initially Facebook, but then Instagram and TikTok. So perception and social credit is very, very important. It's probably more important in this new generation than in any of the generations that have ever lived. And because it's just so much more evident, right? You take, for example, today, you could be on YouTube for hours and TikTok on people literally, and I'm just as guilty as many other people. Before you go to bed, the last half an hour, 1 hour sometimes is just scrolling through TikTok, Instagram feeds. So social credit is very important. So I don't think it's as easy as saying, are they investing just based on hype and the FOMO, but really what's that underlying motivation to follow that fear of missing out? And it's a very real and very strong motivator for I think that the new generation. From a technical sense, of course, you shouldn't invest entirely because of hype. But there's also, even though and I think Ken touched on it a bit, right? Like sometimes the price action is very, very sharp and very short. So there are people who understand the swings in the speculative nature of some of these. And right now, what we're seeing a lot of them is in the NFT space, and so they can, quote unquote, take profit, or they can they can benefit from that sharp rise in that price action. But I don't think it's something that just because something is hyped, it's going to necessarily make you money. I think you need to understand the underlying movement, below that asset or below that NFT or that property. And it's actually very, very difficult, right? There are people who dedicate their entire professional careers right now to understand a lot of these trends on social media, and they have very, very complicated dashboards to be able to look at the engagements and whether these things can move. I'm not sure whether that's in the reach of the typical retail investor.
Yeah, true. Or even the interest level. Okay, Mrs. Tan, we are running out of time. Can you answer the same question about your advice to young people, right, who trade based on hype and FOMO, fear of missing out?
Hype and FOMO, right? But the basic thing I just want to talk is just a stock trading. Is just a first buy the shares what they like. For example, the investor like a traveling. For example, buy Air Asia. That's a company sharing.
Yeah.
And then everybody the investor using the Facebook buy Meta. Something like that. This one is a first step we recommend. And then they buy another share, diversify the portfolio.
Okay, that's fine. Interesting. Fine, that's fine. Look, there was a question about do you and I want to ask all three of you quick answer. Do you think, and this is from Jason, right? Do you think Malaysia will accept Bitcoin as legal tender? So, Mr. San, let's go with Ken first, and then Fats.
Okay, so I think this is, it's a central bank decision. And I think if you have a reasonable currency which doesn't inflate too much, there's no point getting Bitcoin in as a, payment currency. I think it's doing really well as a financial asset, store of value. If you look at the countries that have adopted it, there are countries which have very weak economic regimes, inflation are very high, and they probably don't have very good relationships with the US. So they want to kick out the US dollar and have something new, like some Latin American countries. El Salvador. So I don't think it's the use case for it to be I want to buy my char kway teow with Bitcoin. I don't think it's going to happen.
Okay. Fats, what do you think? So obviously, my prediction is that Afghanistan also will start moving to cryptocurrency based economy. Watch it. See. Okay. All right. Fats,
okay. I think it's a great question by Jason, right? And I think a lot of people have been inspired, if you will, by El Salvador adopting something like Bitcoin. But I think the El Salvador story has to be understood in context. El Salvador didn't have their own El Salvador fiat currency before that. In fact, they were using the US dollar, right? So for them, it wasn't really abandoning their own sovereign currency and then exchanging it for another one. It was switching from an alien currency to them to another one. And I'm sure El Salvador had other considerations for why they would make that move. Now, directly to the question, would Bitcoin be accepted as legal tender here in Malaysia? I think this question has been addressed multiple times by the central bank, by Bank Negara Malaysia, that they have no immediate intention to allow cryptocurrencies of any kind to be accepted as legal tender. And in fact, I think for a lot of the listeners there who are quite interested in where the financial sector in Malaysia is headed, because we're right in the middle of Malaysia FinTech Week 2022, right? The central bank, Bank Negara Malaysia, has just launched the financial sector blueprint 2022 to 2026. So within that, you can read all about where they envision the policy and the direction of the industry moving. And in there is a specific mention of cryptocurrencies and Bank Negara's intention to pursue a CBDC. I will not tell you the year. So if you look through the policy, you'll see that it is not in the near future, but it's also not in the too distant future. So I think we will be looking at a country that's going to be experimenting with CBDCs at the retail front, right? They're already doing it at wholesale. So I think that'll be very interesting. And I think I link it back to my question about China just now. China's not relying on a cryptocurrency to bridge their traditional fiat to this new environment. They're looking at a digital currency. And so maybe that's a path that Malaysia will take. And maybe that's going to open up more opportunities which are just not available in the market right now.
Okay. I think with China, the government is supportive of this because they know it's another way for them to monitor their citizens. Whereas, Malaysians will not allow our government to monitor us where we want to put our money. So that's definitely not going to work here. But so for everyone here, we've got a few more minutes, but at the final 90 seconds, when we are playing the closing video, please stay on because the panelists will also answer some of your questions live. And Fats, if you can, right, Abdul Aziz asked a question, right? You can maybe at the end just answer that, because he has something on NFT trading. But also, I guess there was a question from someone who said that, look, in all panel sessions, panelists only talk positive, right? Is there anything, Mrs. San, maybe I start with you. Is there anything you want to warn, the participants about also who are watching now, anything you want to warn them about in terms of, being a global investor, right? It sounds very sexy and cool, or can do it so easily now. What would you caution them despite this, what the ease of being a global investor? And then Ken, you can take that also.
Yeah, that's a global investor, the stock trading. The stock trader always they're looking at the information. So they're globally. So in that case, investor have to capture the lot of news. So it's kind of difficult. So the stay tuned, the worldwide news and and also the Rakuten Trade app. Also, we provide the news. So the research is very important. Yeah.
Understood. Okay. So, all right. Ken, what do you think of this?
Yeah, I agree. There's a lot of hype by the financial media. They are media at the end of the day. So things that scare you and make you react are really in their wheelhouse. If you look back over the last few years, there's always a headline to scare you, and the markets are built essentially on a wall of worry. There's always something to worry about. If it's not Trump, it's inflation or an inverted yield curve or a ship stuck in the Suez Canal or Russian moving its tanks to places where it shouldn't move its tanks. So there's always something to scare you. And I think if you zoom out and look at the big picture of investing for the long term across a diversified set of asset classes, I think you'll be put in very good stead. So you don't have to over diversify yourself into like every single stock in the world, but a few major indices here and there, a few sectors here and there, you'll be sorted. So don't let the too much noise get to you.
Yeah. Okay. Yeah. I mean, there's just quickly, Fats, what about you? Any thing you want to caution people about? And then we're going to do our final wrap up. And I know there's a question like overview of the 4 approved crypto exchanges. We don't have time, unfortunately, but if any of you know that if there's been someone has done a coverage of comparing the four, maybe share the link with them, right? So they can help go and look themselves, but I'm not aware of it. So Faz, what about this? All of us always talk about positive things at these webinars, right? What would you caution people about in terms of being a global investor?
Yeah, I can only speak to kind of the space that I'm actively looking at day to day, right? The crypto space. Okay. There's a lot of meme coins out there, right? There's a lot of hype. There's a lot of rug pulls. There's a lot of pump and dumps which are happening, right? I think not dissimilar to what you see in the forex space. There's a lot of pump and dump groups. The temptation is very real, right? Everyone's. I know a lot of the investment base is tempted to make money very fast. A lot of money very fast, but if you take the time to really understand what it is that you're buying, you may be more cautious, but you'll be happier long term because don't bet the house on anything at all, no matter how much you believe in it. But do the research to ensure that you know what you're buying. I think on that quick question about how do the four compare, so I think if anybody's looking into that, that's obviously ourselves, mxglobal.com.my. Yep. There's Luno, there's Synergy, there's Tokenize, and even before our promotional period, we were already offering the lowest transaction fee, 0.5%, and right now transaction fees on MX or trading fees are at 0% until the end of February. So that's part of our initial promotional period going to market. And we hope that with the volume, we can continue to kind of maintain the lowest rates in the market. But thank you so much for giving us the opportunity. And I think for everybody out there, to understand what you're buying and understand what you're investing. But I also agree with Mise. You want to invest in what you're a fan of first, right? What you love. And because if you love it, then a lot of people like you love it. And that's probably sound fundamentals for long-term demand, right? And then so I've fallen into the crypto space. There are a few coins that I really believe long-term will change the world. And that's what I'm personally looking for in a lot of these projects. And maybe that's what some people are looking for in similar investments.
Okay, so good. That sounds like you're giving your key takeaway also. So this is the last part. I'm just going to do a key takeaway for everyone. Faz, you just merged your key takeaway into the last question also. Ken, what would be a key takeaway for you for the audience to leave with for today? And then Mrs. San, you can have the last say here.
Yep, very, very simple from me. There'll be a lot of volatility, but one way of investing through it is to invest for the long term and to also dollar cost average. Sounds oversimplified, but if you really look at the data and do the math, that's probably the best habit that you can set yourself up for success in the long term.
Okay, good. Thanks. Mrs. San, what about you? What are your key takeaway for the audience?
Simply conclude and try to diversify as much as possible and get their information. Please watch out the worldwide news. Yes, and the market is very volatile. Yes.
Understood. Okay, so for I want to thank all three of you, and I want to thank all the people who are out there who have given us their most important asset, right? Their time. Thank you very much, and we hope you've picked up and something from this session. I think for me, the key takeaway is that despite all the software and the algorithms, right, the AI that is there, the analytics and the smart people working in both companies, so much of it is still relying on you. What you want for yourself and what you think, right? Your investment horizon and your risk appetite. It's interesting because they say in the internet world, right? Although the internet is disruptive and all that, but business models can be changed, but the fundamentals don't change, right? You obviously got to earn more than you're pushing out. Some of the rock bottom rules of business world have not changed. Just the layer on top with technology being a new layer, right? So you have to be aware of some of these fundamentals, all that, right? For everyone there, thank you for your time again, and we look forward to seeing you at our subsequent Top in Tech episodes. And remember, just stay on for the next 90 seconds when we do our closing video, because the three panelists will be engaging with you if there's anything they want to answer or reply to you or share information with you. Thank you very much, and see you again soon.
Thank you.